Although I wanted to take a moment and put something into perspective. So last week when we did our market update, I mentioned that I believe there's a current tug of war taking place in the marketplace. And on one end of the rope, we have these companies that are reporting fantastic earnings. In many cases, they're reporting historic earnings. And on the other end of the rope, we have the threat of rising interest rates, and we have inflation that's back. And we have these forces pooling. And what we're seeing is the volatility from day to day. I had mentioned that I believe long-term, the market continues to go up and to the right. However, I would expect that climb to be a volatile one. But I want to put something into perspective. When we talk about inflation, inflation is definitely a problem, and it's something that needs to be under control. However, inflation by itself in the long run doesn't kill stocks. In the short run, it can create some problems because if I look at a revenue stream produced by a company, a publicly traded company, well, that revenue stream has less purchasing power if we've got rising inflation. However, these publicly traded companies have the ability to raise their prices, which goes along with inflation. So that revenue stream should increase along with inflation long term. The component that does have the ability to sink stocks is interest rates. So cheap money lubricates the business wheel, expensive money grinds it to a halt. There is something though to what I want to put into perspective is the timing on that. So last week, all attention was on the Federal Reserve, their meetings. And one of the things that they said was they saw potentially an interest rate increase or two by mid to late 2023. And when they first came out with that, we saw stocks sell out. But then the next day it rebounded because, come on, 2023, we still have some time here before that happens. In the last 50 years, if you take the pandemic aside that we had from COVID, which we took an economy that was running on all cylinders and we intentionally stopped it. If we take that out of the equation and we look at the past 50 years, there has never been a recession that occurred when interest rates were below 4%. So the Federal Reserve kind of telegraphed that maybe mid-2023, late 2023, we could see some interest rate hikes. When those happen, they typically don't go from 0 to 4% or 0 to 5%. Historically, they do that at 0.25% at a time. And they generally rise that interest rate. So that's forecasted well ahead of time. So it's not like when they begin to raise those interest rates that stocks automatically will stop growing. That is not the case. So I foresee the stock market to continue to climb, rising to the right. I expect it to be a volatile one. But the other thing that we have to remember is, as of right now, if I'm an investor, what are my options for growing my money? Stocks are still the most attractive. Real estate is attractive right now. And because of that, we will continue to see, in my opinion, the market continue to climb higher. I'm Nate Crosby. Thanks for listening.